Ta-da! Here I am. Alright, so you'll have to excuse me if you already know a lot of this, but there's lots of people that won't know the answers to these questions, so I'm going to start at the basics and pretend that you don't know anything. There is a lot of technical words and I'll try not to use them and just be slow and to the point for you. So these things here, let's get rid of everything that's going to look a little bit complicated for now, because we don't need any of these for these basic for these basics. So let's get rid of this one as well. Yeah, that's healthier. Why are you still there? Okay, so let's start by these little numbers here at the top. Really important that when you look at anything in life that you're going to analyse as to whether you want to buy it maybe, or is it something that you want to invest your time into, it's normally good to do your research, right? And look at like if it was going to be a diamond, you look at it, how it looks on your finger, or if you were to then want to know if it's real, then you get you get one of the little eye things, and you look right in and make sure the diamond's perfect and it's got no dark spots in there. So it's a good diamond. And that's really when you're looking at buying an asset or trading an asset, you need to know the same. You need to kind of look at it from what they call a macro picture, and then they need to zoom in and look at it in detail. And that's really what these numbers and letters mean. You've probably worked out, if you haven't already, the 1M is 1 minute, then you've got the 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily. Now I've said daily, you'll know that that's the weekly, right? So what does it do? Well, if we click the W, what this tells us is that each one of these either red or green candles, right, represents 1 week. So obviously it's Sunday now, isn't it? So tonight at 12 o'clock, we're gonna have another. Alex, it's going to go on to Monday. We're going to have another candle open up, because obviously we're at the end of the week. Tonight, now gone on to the daily. Tonight we'll have another candle open up. Yeah. So these candles all represent. So when if we're going to look at Bitcoin now, for example, it would be good to take a real big picture. If we zoom right out to kind of these levels here, we're going back. By the way, down here where you see these dates, these tell you where we're at now. So there you go. It's Monday the 12th of January, and this blue line here is one that I like to look at to see the overall trend as to where Bitcoin's going. Are we on the way up or are we on the way down? Because from December 2015 or November 2015 all the way to May 2018, Bitcoin kept on bouncing off of this blue line. So this blue line is really powerful to find out whether we're on our way up or whether we're on our way down. Because once we broke it and we came down here, we just kept on bouncing off of it. And then when we broke it again, we stayed with it from April all the way through to, well, arguably there, April to November. So for, what's that, April, November, 6 months or so, we stayed above it. And then obviously we've stayed above it all the way up to it. So yeah, it's a really powerful indicator. And what that does is that gets the average, that's what it's called the EMA 50. So it takes 50 of these candles and then it averages it out over a period, and then that gives you this kind of smoothing line, this line of best fit that kind of averages it out. And the E just stands for exponential. So you can have a 50 MA, 50 moving average, or a 50 EMA. And the exponential word just means that it'll stick ever so slightly tighter to the price action of whatever asset it is that you're looking at. Very powerful when you're looking at Bitcoin. Incidentally, the 200 week moving average. Actually, before we go to the 200, let me just say that whilst the EMA, the 50 EMA there is is it means the 50-week moving average. If we change it to the daily, each one of these candles now represents a day, right? But that 50 EMA doesn't change. That's still 50, but instead of it looking at 50 weeks and giving you the average of weeks, it's giving you the average of days. So you'll see now, because it's days and not weeks, you're above and below the line constantly. So it's not as powerful of an indicator on its own than the 50 week. When we go to the weekly, it then changes again. And where I was going to go then after, so now you understand that, where I was going to go then is looking, if we just go into the settings and change the settings from 50, and we'll change the settings to 200, this 200 is probably the most powerful indicator to know whether we're still bullish or bearish on Bitcoin. And the reason why is because we only really broke it for a week there, arguably a week and a half, but we actually broke it properly where they closed back in 2022. So even, yeah, this was COVID here, but yeah, just seeing patterns. But yeah, so we were really quite bearish there, and people that were involved in crypto that knows these things that I'm teaching you now, we're worried, because we're thinking, okay, well, we've finally gone under the 200. How long are we going to be here? You know, is this going to roll over, and then is this the end of Bitcoin? You know, but now we've bounced off of it, and we're on our way up now. So this is a real good sign. So it's a bullish sign for Bitcoin. Let's have a look at the chat. See if we have any questions. No, we don't. We're in public. Yeah. Guys, if you've made it this far, please press the like button, and if you want to help me somehow give back, then I'll need you to subscribe, because it's all about subscribers for me at the minute, because in order for me to get monetized, I need subscribers, otherwise they won't touch me with a barge pole. So yeah, do it. Bitcoin dominance. This is the price of Bitcoin. So you got the price up here versus the dates. So these are the dates, these are the prices, and then you can go to Bitcoin dominance. So you've probably heard of altcoins. If you're already involved in Bitcoin, then the chances are you're a little bit of a play it on the edge kind of person, and therefore maybe you went into Bitcoin to start with, but realized all these other tokens and coins were going a lot faster and thought, I want some of that action, and then moved over to altcoins. And now Bitcoin has massively outperformed altcoins, and has done since 22, where it's just gone up and up and up and up. So the Bitcoin dominance is the top 25 altcoins by market cap. So they get all of them, they add up the market cap of each coin, and once they've added it, so it's calculated by dividing a coin's market cap by the overall market cap of the top 125 tokens, and then multiplying it by 100. So they find in the mean, and that's what they do. They compare that then with the market cap of Bitcoin, and then trade off of each other as to which one's doing the better. Hey Daz, I just noticed you've chatted. Nice to have you here with us. Any questions, post them my way. So yeah, then that's what you've got there. You've got the balance between the two. But why is that important for us if we're looking at getting into Bitcoin now, or altcoins? Well, if we look here, you've got May 2014, so it was at the beginning of 2014 that Bitcoin came out. This is why we're at 100% here, is because obviously Bitcoin was the first altcoin, and then I'm making this up now, but maybe XRP came out here, and then that's why it dipped down, and then maybe Ethereum came out here and it dipped down some more, and then others started taking traction and going up in price. And then when you look at those altcoins, I mean, I mean, imagine running all the way down here. It's just a tremendous time. And then people that bought in here into altcoins would have watched their Bitcoin purchasing power go down as we're going up here. So you've got this, yeah. So for those that had altcoins here in 22, they might have had, well, whatever they had in altcoins. Now they're seeing that versus the Bitcoin price go right down. You know, you might have had a Bitcoin here in altcoins, and now it might be sat at, you know, like 0.4 Bitcoin or something. So it really begs the question: is, are we going to have such a time now where our altcoin bags will be able to buy back the Bitcoin that we once had? Well, the answer to that is we would need Bitcoin to we would need the Bitcoin dominance here to top out and then roll back over again. And there are various signals to me that I'm looking for to say, well, at what point will that happen? And when I look at Bitcoin dominance now, I'm seeing that there is quite a way up. The 50 moving average here is moving up, and we are away from the 618 and 66 area here of the fibs. So I can see, not to the point that I'm going to do something about it. I'm going to have diamond hands and hold my portfolio and not change it. But I see Bitcoin continuing to outperform altcoins, at least until we get into this kind of grey area here. If I just put array here, and another one just here, I'd say this area here is where I would expect Bitcoin dominance to go to. And if we look at that as a measured move from a percentage point of view, I'd say that we need to go up by another between 4 and 8% before we see the altcoins roll over then in altcoins. And then we'll probably end up landing on the 50 moving average again, kind of around this previous area. So I think altcoins have got a lot to go through to try and make it. So yeah, absolutely. I mean, that was Dad said he should have jumped onto Bitcoin when it was $7. The thing back then, when it was $7, it was difficult to get into. Now you can download Coinbase or Binance and just transfer some money over and buy it. But back then you had to go through third parties, and it was difficult to buy into. But yeah, I mean, the earliest this goes back to is the lowest price there. Yeah, you got a low. See, as I hover over these candles, that's another thing to bear in mind. If you want to know what the price was, you don't need to put your crosshair on the bottom of the candle. You can just hover over the candle like that, and at the top here I'm looking at the O, the H, the L and the C, and then that will tell me in that week that it opened at $260, and the high was 260, the low was 109, and it closed at $184. So yeah, it was a difficult time there. But yeah, so that's what the open, the high, the low and the close. So the information's all there. You just got to hover over that candle for it to give you the information. Alright, so that's the first, second, maybe third point that I've mentioned. Now you kind of get what's going on there. We can start introducing another indicator called the RSI. And the RSI stands for Relative Strength Index, and that gives you an indication of whether something's overbought or oversold. If something's overbought, that means that you've got a lot of it, and it's likely that people will sell because it's overbought. Likewise, things that are oversold become more scarce and people want it because people haven't got it, right? So when you see the prices up here, you're looking at the chances are that the prices are going to go down at some point. This is a very basic view. And then when they're over here, the chances are that the prices are going to go up. Now, if you can, the way that I like to view this is it's like a spring. If you compress a spring and then let go, the spring will fly off. Yeah, and that's how I like to look at this, especially when we're in a market that's going up. Is that if we are in a situation where the price is going down, it goes up, and then the next down, like it's made here. Hang on a sec. Yeah, so we've got this bottom here. If I draw it, it might help actually. So you've got this bottom here, and then another bottom, then another bottom. Then what you've got there are what they call higher lows, because this is a low, then it comes down and makes another low, and then this is a low, but each one is higher, right? Well, what does the price, so that's your price action, making higher lows. Now what do the lows of this RSI do? Well, they are making lower. So as the price is going up, we're going into an area where it's saying that it's oversold, which means the only way up then is for it to continue going up. But the price is already going up, and this is a really, really bullish signal that the price is going to continue to go up, right? And it's things like that we use this RSI for. It's trying to find indicators that we can use that show what we call confluence or convergence. It's confluence through using different signals and indicators in trading view that all back each other up and say, yeah, the price will continue to go. Yeah, and then once you've looked at this weekly and you've got confluence using these different indicators that we've mentioned, like this moving average, like looking at the lows of a trend of the price action versus this RSI, that we start to build a confidence that, hey, this asset will continue to go up and I'm happy with this. All this in the industry we call technical analysis. And we have to give it that name, technical analysis, because there's another side, a flip side to looking at something and analysing it, whether it's going to be good to buy or not, and that's fundamental analysis. So if we were to look at the fundamental analysis of, let's think of something that would be fundamentally, monumentally a screw up right now. I think Tesla isn't doing too good, is it? We could have a look at Tesla. But I know that Elon Musk, obviously, while he's doing his Doge over in America, that yeah, they're looks like I've already had it. Watch Tesla doing really well now, and totally humiliate me. Yeah, so yeah, Tesla's been going down, although it looks like we've got a bit of a bounce here again off of that 200. You notice that? That's why it's so powerful, because it works. Yeah, so it's not been doing too well. We've got this bit of a bounce here, which is good for Tesla, and quite frankly, I'm pleased to see it. But we have just entered the second quarter now, haven't we? Q2. It's good. It's good for Tesla. But when you look at the fundamentals, you say, okay, well, you know, Elon Musk's got his mind on other things. Oil is looking at you know, to be used in the USA, and fundamentally, electric cars right now are not. It's not looking too good, and for that reason, you could draw the conclusion that electric vehicles are not a great asset to go into right now until we get more of a fundamental reason why EVs, electric vehicles, are going to do well. So the fundamentals may say stay away until we're confident that it's going to take a turn and do well. It might be that you get insider information that Tesla are going to release a new car next month, in which case that would be a great time to buy, because you'd have fundamentally, you'd say, yeah, it's looking really good, and technically, you know, we're in the oversold, we're underneath this middle line, and and we've bounced off of this 200. So Tesla seems to be, this is from a very shallow view, is looking at it and saying, okay, well, there's confluence there both fundamentally and technically that Tesla would be a good investment right now. Unless, of course, you know things that I don't to do with Tesla. But yeah, anybody who's watching, please just nip in and say hi. Right, so I tangent. Apologies. So let's go back to this one. Now, what else is there to show you? The VPVR. Now, this is a paid trading view. What I'm using here is a free subscription, but you can only have limited amount of tools on the screen at once, and some tools you can't gain access to unless you pay the subscription. So I think that it's worth it to make the payment so that I can have things like this visible range. So you've got these bars here, and you've got these bars along here. These tell you the volume of trades that have been done in the day or the week. Let's go to the daily. So this one is the highest green candle, so that one there we had a massive trading day there. And let's see what day that was. November, nothing special about November, but it was a Monday. Here we go. What's that? Wednesday? Don't know. Yeah, but so yeah, maybe. But so there was a lot traded that day. Don't know, maybe. Who knows? So yeah, this is your volume of how much has been traded in that day. Whereas these lines here, these tell you how much has been traded during the time of whatever's on the screen at the minute. So this stands for visible range volume profile. So this is the volume on the day, and this is the volume of trades that have been done on the screen as you see it. So for us now, this is from the 24th of March, the 20th of August to today's date. Then if I move and zoom right out, then what you've got is a completely, look at that, watch that move, there you go. So that's showing a completely different picture, because with the visible range is what you can see, it's what's visible on the screen at this moment. So this will always change as you start moving out what you can see. This will change to just this bit. So nothing below here will be showing because you don't have anything in your view. And now it'll all come down here because it's showing you everything that's visibly in range. So you can build up a profile of what's being traded on the day, how much, and also what's being traded on what you've got on the screen, which is really helpful when you're looking at knowing whether an asset's likely to go down or up by looking at the big holes. So lots of volume here, lots of volume here. So there's the yellow is the sell orders and the blue is the buys. That you've got potential resistance here. But the thing is, because we haven't got anything above here, we don't know what everyone's going to do. So if we break this, like this area here, these highs, and we go into new highs, into new territory, we have no history to go back. There's nothing we can do to look at where we're about to go. It'll just become psychological numbers then, like 100,000, 120,000, 150,000. These will be psychological numbers there, where people have said, if Bitcoin, I own Bitcoin, and if it gets to 150,000, I'm selling, and then other people, will say, well, if it gets to 150,000, I'll be confident that it's definitely going to 1 million then, for example. I don't know. So psychologically, these numbers mean something and they hold weight. So that's it in a nutshell of the most basic You've got moving averages, you've got volume indicators, and then we can start going a little bit more in depth. Like this is like a entry level indicator. If I hide this EMA here. In fact, that was 200. If I actually, I'll keep it on actually, and I will move that, make that a 50, because there's something I can show you in a minute with the 50. Yeah. Okay. So yeah, with the Bollinger Bands, what you have here is you bounce off the top and the bottom. It's a very intuitive indicator. If we use this with the other EMA, with this one, when you get a cross between the middle of the Bollinger Band and the 50, then you get what we call a buy signal, a buy and sell signal. So this was a sell. We've just had a buy, and you know, if it crosses again, it'll be a sell. But you can almost yeah, like here it's a buy. It went down. You stay with it until it crosses, and it doesn't cross, and you don't sell until here where it crossed, and then you don't buy even though you've missed out up to here. It's saying that here was the best time to buy. So, and that's where we are now. So according to this strategy, the 50 and the middle of the Bollinger Band, which is the 20, I'll go to the settings. There you go. Length is so the Bollinger Band medium line is 20, simple moving average. Yeah, when you get the 20 cross the 50, this is a buy and sell signal on its own. Can be quite powerful. So yeah, I guess that's enough for now. Unless again anybody comes on and asks any questions, I guess that's enough for now. It would be good to see some comments in the comments to see if you enjoy this sort of thing and whether it's worth me mentioning other indicators like the Ichimoku cloud, like the different patterns, head and shoulders, W's, M's, and yeah, other patterns. There's Fibonacci patterns. There's Wyckoff. There's so many. There's so many patterns and stuff that we can go into. Pitchforks. How to set our pitchforks to know where we're going to find support and resistance on our way up or down. Lots to look forward to. But I'm only going to know if you're interested in that sort of thing if you comment. And again, if you've made it this far, I commend you, well done. It would have been nice to have some more interaction, but I'm really pleased that Daz has given me a couple of comments. So there you go, guys. That's a half an hour little introduction into trading and TradingView. So yep, it's great to see you. I'll be finished uni in 4 weeks today. 4 weeks today is my end of module assessment, my EMA, my project. And I'm looking at, does increased income increase happiness? So let me know. Let me know what you think. And yeah, guys, really, really great. I'm pleased that I could bring something to the table. Even if just one of you watched this video to the end and you've learnt something about trading, then I've achieved my goal. And yeah, thank you. And with that, I'll say, ta-ra.